All right, so I've been getting a lot of questions on gold these days. Who should own gold? How much should they own? How do I invest in it? All of those kinds of things. And there's no straight answer for everybody. There's no one size fits all. Look, doomsdayers like it because they're worried about the US currency going to zero, but there's some legitimate investing purposes to diversify a portfolio. So let's talk about the basics of who should invest in gold, how and why, all that type of stuff. So, first things first, let's talk about why invest in gold. Well, gold is a great inflation hedge, right? Currency devaluations, market volatility, these all things that commonly raise the value of gold. It increases the people that want gold, unlike paper assets. It provides a tangible store of wealth. So there's some good reasons right there. And if you don't think gold is a currency, you might want to go look at how many countries own gold to back their currencies. The central banking system has it in reserve. So when they owe debt, like what US treasuries are, we have a ton of gold, a lot more than a ton. There's like 800 tons of gold. So we utilize this to bolster the value of the currency as a country. So it is a currency. It's globally used this way. Even the International Monetary Fund, it's I think the third or fourth largest holder of gold. They all own more gold than any individual owns. So very important to understand that it is a currency. It's an international currency. So, although gold prices can be volatile in the short term, we need to look at gold as a longer term safeguard against economic uncertainty and global political turmoil. Okay. Very commonly, everybody rushes to gold as political tensions rise, as global tensions rise. So this is a great diversification for periods like that. Gold also has an incredibly low correlation to stocks and bonds, and it's very easily invested to. And a very low correlation is incredibly important for portfolio diversification. There's a great book out there called The Holy Grail of Investing. It kind of gives you some insight as to how the uber wealthy are able to invest in ways that us normal people can't. And they're able to put their money in very uncorrelated growth investments. And when you have, they talk about 10 very uncorrelated growth investments, your portfolio is going to do better. And when we talk about uncorrelated, when stocks zig, gold zags, but not perfectly. Sometimes it goes together, sometimes it doesn't. And the whole idea is that these assets aren't tied to each other in any way. So it's very important that you have uncorrelated assets, and that's the diversification standpoint. So the stuff that affects gold, well, supply and demand is the basic of it. Countries, central banks of countries have been net buyers since 2010. So we're talking almost over 15 years now. They've been net buyers, meaning there's a few countries that sell off a little here and there when they need money as opposed to getting debt because these countries are not in great financial shape. Whereas there are countries out there increasing, and I have a video I talk about what's going on out there with that because the price of gold keeps going up and up and up and helping people understand why that is, right? But it's important to understand that the factors that apply to gold, if you just look at the simple supply and demand, countries want more of it, so they're sucking it up, right? But we also use it for practical reasons everywhere. There's not a cell phone out there without gold in it. There's your flat screen TVs have gold in them. Believe it or not, the electronics world is filled with gold. There's gold in all of it. And it's because it is a very, very unique metal. It is a great conductor. It does lots of wonderful things. And now they're starting to use it in the medical field. They're using it all over the place. Aerospace, when we talk about flying to the moon or going to Mars, they're using gold in that stuff all the time. All that stuff uses gold. So understand that supply and demand is a very important part of the pricing of gold. Okay, so understanding also that the economic conditions, the global turmoil, all those types of things are going to affect the price. So there you go, global economic uncertainty, high inflation in the US, that's going to cause people run to gold. And then currency strength. As the US dollar weakens, you want to own gold in that case. So that's the idea. If it took you $2,000 to buy gold and the US dollar weakens, and then all of a sudden it takes $3,000 to buy gold, wouldn't it be nice to own the gold in that transition so you can buy it for $2,000 and sell it for $3,000, making up for the reduction in your purchasing power with US dollars? So we have portfolio diversification and we have currency diversification. And all of these things, the economic uncertainty and the inflation, the currency strength, these are all things on top of supply and demand that affect the price of gold. So how do we buy it? If I'm supposed to own gold, then what's the best way for me to own it? Well, there's no right answer for everyone. There is a right answer, though. So physical gold. Some people really have to have that physical gold at home. That's the only reason to invest in it. They say they're the doomsdayers that want to be able to shave off pieces and buy things later in life. When the currency is not worth anything. So there's some issues with buying physical gold. We all like to have it, but understand the cost to buy and sell. So we want to be long-term holders of this. You're going to pay a premium to buy the physical gold, and then the cost or risk to store it. So you're either going to hand it over to an entity to store it for you, and you're going to pay fees for that, or you're going to hold it at home, and then you have the risk of all that value sitting at the house. From a taxation standpoint, owning the physical gold typically will come with an advantage. Now, the gold eagles, U.S. Mint gold eagles, are considered currency, so there is no taxation on the gold eagles. Everything else you are supposed to report buying and selling and paying the capital gains tax on that. I'll leave it at that. Gold ETFs and mutual funds. Now, the people that are have to have the physical gold, they hate this stuff. This doesn't make any sense. It's just paper gold. And you don't actually own the physical stuff. So understand, this makes it very easy to invest in, though, to add it to a portfolio. The most popular ETF, GLD, it just follows the price of gold. The only problem is it has the attrition of the fee. So it's essentially the price of gold minus the fee. Okay, but it doesn't earn any interest. It doesn't pay dividends. It's very boring. You just put it in your portfolio, and when the price of gold goes up, it goes up. So a lot of people see some give and take on this. There's some fancy mutual funds out there using futures contracts and more extravagant investing when it comes to gold. I saw another one saying, hey, it's a gold yield, and it's because they own bonds and some gold. Well, look, you own gold and you're getting a yield. Yeah, but you own bonds and some gold. Didn't really make sense to say it's a gold fund, but okay, whatever. So you got to be careful about some of these marketing tricks that are out there and understand exactly what you do own in that mutual fund world. Next part, gold mining stocks have been terrible forever, to be real honest. Just like the gold boom, I would rather be selling the pickaxes to the gold mining stocks out there. Even though the price of gold goes up, the price of gold mining stocks has not done well. So understand that this is a way to invest in gold, but the history of the investing strategy has not been that great. And then there's private gold investing, some great funds out there. There's one called the Gold Yield Fund that is pretty fantastic. It is a private fund, so it does come with the good and bad of private investments. The big side of that is understanding most of the legitimate private investments out there, 500,000 minimum deposit plus. that holy grail of investing book, most of those investments are $1 million is the minimum. So the reality is you do have to be a higher net worth person to be able to invest in this, because not only does it have a higher limit on the minimums you can put in there, but it also is going to restrict your access. That gold yield fund, you are legitimately earning interest on gold, and this is the great part of that. But you're going to be locked up. They lease the gold out. It's an insured lease, and they can lend it out in some perspectives too. So if you're looking to earn more on gold, this is a fantastic way to physically own gold and follow the price of gold, plus compounding that interest on top of that by leasing it out. Believe it or not, there's a huge market out there. People want to borrow and lease gold. And it's counterintuitive to a lot of our brains, but there's a huge marketplace out there for that. There's a very legitimate reason when you understand why there's a marketplace for it. There's entities out there like somebody making cell phones that have to buy gold constantly to make the circuitry in there. They like having that because they can determine the price now on the product that they're selling now. If price goes up on gold, then all of a sudden the phones that they're making, it messes up the whole pricing mechanism on there. So they can lock in the price by borrowing in the form of gold. It's really brilliant, and a lot of legitimate businesses out there are doing this. So if you can come up with the higher minimum investments and you're okay not touching this money, then understand that there's much better ways to invest. Again, you go back to that holy grail of investing and you start seeing how much wealthier people are able to invest in better ways, right? You can sit and own physical gold. Anybody can go buy a gold coin, but you can't have access to a marketplace that allows you to lease the gold out. And so there are investment funds out there that actually are able to take advantage of things like this and create this global market of gold lending that is going on out there under our noses. Most common people don't understand or know anything about this stuff, but it's going on regularly. And it has performed fantastic. So understand there's a lot of different ways, and this might be right for you. Buy physical gold, go hide it in the wall in your closet. For those of us that just want the diversification in our portfolio, we can go buy a gold ETF. Some people want to further diversify by owning some of the mining stocks. But then there's the wealthier people that get advantaged investing strategies that us regular people don't necessarily get access to. Then there's the risk of owning gold. Yes, there is risk, right? So we do need to understand that. Gold does have risk. There is price fluctuations, and there's cost to buy and sell if you're owning the physical gold. So it's important you understand these risks before you invest in gold. Price volatility is the first one. Yes, price does go down occasionally. You look through history and it goes up and down, not as much as the stock market, but it definitely has some dips in it. No yield. Well, if you're just buying gold like a normal person, whether it's the gold ETF or owning physical gold, you're not going to earn interest or earn dividends on that. Now, as I said, there are other ways to invest in gold, and they do provide that yield. Storage costs, we got to add that in, cost to buy and sell. And then liquidity. Again, if you go to those private investments, you're going to have to understand the liquidity on that and the lack of access to that money. So let's get to the root of this. How much gold should I own? Well, the reality is I read all the financial planning rags out there, and I'm always looking at this stuff, and we're seeing a lot more common allocation to gold. But there is no one-size-fits-all answer. So understanding that as I go through all the experts out there, you see anywhere from 5 to 10% of your investment portfolio makes sense in a commodities and or gold metals portfolio. Okay, now everybody's got a different situation. So where in that range you should fall depends on a lot of different things. Your risk tolerance. Gold has volatility to it, right? So you can lose money. Now, how do you lose money when it's volatility? The idea of gold going to zero is less likely than the US dollar going to zero in my head. But the reality is you can lose if an investment goes to zero. The idea of actual physical gold going to zero is slim to none, but the reality is volatility turns into losses if you need the money when it's down, right? I talk about that all the time. When we talk about stocks, you can have your whole portfolio in stocks as long as you don't need money when it's down, everything's fine. Okay? So gold is the same thing. If gold has some volatility to it, as long as you don't need it when it's down, it's not losses, it's just volatility. Cash savings, right? You should have an emergency fund. You should have enough financial wherewithal to be able to invest in something without needing to reach right back in and take it right back out. Right? You should have a cushion between you and your investments. Remember, gold, especially if you're buying physical gold. If you're going to buy the ETF, you can buy and sell all you want. But if you're going to own the actual gold, and that is same for private investments, that owns the physical gold, then you understand that there's going to be some restrictions, whether it's a cost to buy and sell or the restrictions of the investing strategy. Years before the money is needed. And there you go. This is a long-term investment, a long-term diversification for a portfolio. Day-to-day fluctuations, but ETF is probably the only way I would go if you're going to try to time the market, play speculative plays on this. So we got to be careful about that side of it. So your portfolio should have a mix of investments that should be weighted to suit your risk tolerance and needs. That's so important. It's not just your risk tolerance, but we need to understand your needs too. I've had plenty of people say, hey, 100% stock market. Oh, but I need a 6% withdrawal rate. Yeah, well, the volatility of the market is not going to do you any favors when it comes to making that withdrawal rate. So be careful about that stuff. Make sure that this is a right allocation for you. And again, this is diversification. It's diversification from your currency that you primarily live in, and it's diversification of your investment portfolio. It does well when things aren't doing well. That's what we like to see. That's a good diversification. All right, I hope that helps. Yourinvestmentcounselor.com. If you want to meet with us for any reason, you can do a free meet and greet. We also will work hourly, but we also have full service management as well. So all the options for everybody. I'm always happy to help or discuss this and ways to invest, whether it's gold or anything else, obviously. This is more the financial planning side of it than anything else. FPFEAZ.org. That is our nonprofit that we do the full form education in. So instead of the 10, 20-minute videos, we're doing hour and a half long classes live via Zoom. FPFEAZ.org. We do a different topic every single month and lots of options to view that class. Certainly give us a call, like, share, subscribe, do all those wonderful things. We got new videos every single week. We'll see you soon.